The first week of the ghost month is over. The Philippine Index fell 1.82%. Is it going to get any worse? Let's discuss. My name is Dan Slim and welcome to another episode of Monday Market Outlook. Mixed performances by the global markets with Vietnam and Taiwan leading the Asian region, while the Malaysian and the Philippine Index falling by 1.92 and 1.82% respectively. The BSP's 25 basis point rate cut on Thursday came as no surprise, having widely been anticipated by the markets. However, Governor Remolona's remarks suggest that this may be the last adjustment for the year, with rates likely staying on hold if current inflation and growth trends persist. Looking forward to this week, inflation numbers will be announced this Friday with unemployment figures the week after. At this point, a pause in the BSP's October Monetary Board meeting seems likely, particularly since rates have already been cut 3 times this year. As for the Fed, the key question is whether they'll proceed with the rate cut at their September 12 meeting, especially with core inflation continuing to rise, coming in at 2.9%, the highest since February. Although inflation has eased significantly from its peak around 7% 3 years ago, it remains well above the Fed's 2% target. Now, to make matters worse, the report indicated that consumer spending strengthened last month. This shows that consumers are still willing to open their wallets despite the high interest rates and uncertainty surrounding the direction of the economy. Meanwhile, Trump remains relentless in pushing the Fed to lower interest rates since the start of the year. On Monday, he sought to dismiss Lisa Cook over alleged misstatements regarding her mortgage. Naturally, the Philippines wasn't going to be left out. While no one from the BSP lost their jobs, it was the chief of police who ended up being relieved of duty, fortunately or unfortunately. Now, meanwhile, it is the same old news in the Philippine market, but with gold's rally, the mining sector suddenly came to life. Now, the property sector pulled back a bit, but still outperformed the broader index, with the holding firms and the services sector underperforming the markets. Now, this week is a crucial one for the markets. Now, if we look at the charts, we find ourselves back at the 6150 level with the 6,100 support range, aligning with the horizontal support and the trend line support. It is still untested. So the ghost month began with a sharp drop triggered by the MSCI rebalancing, and although there was a rebound the following day, the market struggled to sustain momentum amid persistent selling pressure. So this week is crucial because a break of this level could plunge us all the way down into the next area of support, which is at 6,000. Now, this level is particularly significant again because there's the horizontal support, there's the trend line support, and if we draw a Fibonacci here, this also aligns with the 61.8 Fib. So if this strong support fails, right, it could turn into a very tough resistance barrier in the coming months. Now, will the ghost month spirits continue to push the markets down until the near end of September, here at September 22, when the ghost month will end? We may find ourselves at 6,000. So best case really right now is for the 6,100 level to hold. So from 6,150 here to 6,100, there may still be some room to go down. Now, similar to the index for this week, let's look at some stocks who are also on live support. So let's start with Ayala Corp. Last week Ayala Corp just broke support here. We didn't expect Ayala Corp to plunge to the next support level 545 this fast, right? So something's happening with Ayala Corp. It is now back to 545. Now this level has been a strong support for Ayala Corp. So Ayala Corp now moving in a range 545, 610. It is back at 545. Is this a good opportunity to buy? Wait until this has some type of basing structure, right? Because a break of that could mean a test to the 500 level here. And look at where it corresponds. See, I don't even know if it corresponds correctly here. Where does it end, right? 500 or 467. But of course, 500 is a good psychological even number. We always try to reconcile even numbers. But I mean, that's a long way down for Ayala Corp. So watch out for Ayala Corp here. It may consolidate along this area given that it is a very strong support and it's now at oversold levels. Now SM has actually broken through this support area here, but there's reason to believe that it may actually test support here at 744.50 or 745 because it tested that level previously back in April. So there's still some ways to go for SM to retest 745 because it is still showing some selling pressure here. Question is, well, will SM's buyback come in? So we'll see. So there's still room for SM to go down. Meanwhile, AEV is at 29.10. I mean, the last time we saw AEV at this level was back in the pandemic. So AEV has been beaten and battered for a very long time, right? So we're seeing some promising signs here of consolidation, range trading along 31.15 to 29.10. But we've seen that before and we thought that the worst was over for AEV, but apparently not. So we'll see what happens with AEV, but it's also on life support. Now, the big three banks are also on life support. Looking at BDO, it is at its support here at around 137 to 135. It's been here several times in the past 12 months. And if this support level breaks, the next level of support will be at 127. So things are looking precarious for BDO. BPI has actually broken through the support level here at 116 and is now probably going to test 110 as its next support level. Currently, it has stabilized at around 113, but this may continue to 110. Now, it has actually touched that briefly all the way down to 108.4, but look for BPI at 110 here, where it bounced off June of 2024. Metrobank in the same situation here. Look at that life support. This is the buy zone 1. This is buy zone 2. It doesn't look good for the banks right now. Our hope is that they could bounce off these critical levels. If Metrobank fails, it might hit 67.25 in the next few weeks. Now, not only that, the telcos under pressure because of the Conectado bill. Now, Globe has already broken support and is now on its way to 1485. Now, the last support was at 1625. And this level here, 1485, actually corresponds to this level here previously back in April of 2018, right? So it can even go down to 1450 in the next few weeks. So still some ways to go for Globe. Even PLDT, I mean, it can still go down to 1,150. It is currently at 1,159. I mean, look at the possibilities here for PLDT. If this support doesn't hold, we can see PLDT at 1,100. So these sectors are now at life support. So is it time to buy these stocks? Not yet, right? Not yet. Wait for things to settle down, right? But for some stocks, maybe they are at interesting levels. Let's look at these stocks for 7, right? So what's happened with 7? It hit resistance here and pulled back, right? But there's a breakout of this level, breakout, retest of support. This could be a good chance to enter for 7 if this support level holds. Now, Cebu Pac also, I mean, Cebu Pac has been one of the top performers of the PSE this year. So breakout of this level, retest, right? But it has retested it twice. So there is some selling pressure happening with Cebu Pacific, and the oscillators are showing some signs of divergence here. So maybe not a good sign for Cebu Pacific if you're looking at it. But let's see if Cebu Pacific can hold this support level. Next, we have Wilcon. Now, Wilcon has hit a resistance level here at around 10 pesos, 10.18. It has pulled back. We're expecting it to pull back here. It broke this support level here, but it bounced off the next support level here at 8.37 and has entered back into this consolidation zone here at 9.29 pesos. So this could be a good chance to enter into Wilcon, at least for a technical play. If we draw a long position here, if you enter here and maybe set a stop loss here and a take profit zone here, right, that still represents a 2:1 risk reward ratio. So I mean, you risk 5%, you could gain 11% with this trade. So maybe a trade we can do for the coming week. Now next we have SPNEC. Now SPNEC has peaked at 162. Now it's back into the breakout area here along 128 and it settled at 130. Now it's tested 128 twice, right? So SPNEC broke out 128, retested 128 right now. So a bounce for SPNEC here could be a good chance to enter. Now SPNEC is a risky play, but it is one of the potential renewable energy plays for the coming year. So let's see what happens with SPNEC. Just to highlight some successful bounces, we have CNPF. It broke support here. The next line of support here is at 32.10. It didn't reach that. It just reached 32.75 and it bounced off of that and is now retesting 36.70 resistance, right? But with the momentum here, it could easily break out of this resistance at 36.70. So there is some merit into buying into critical areas here, but again, be careful, right? Now Jollibee also. I mean, Jollibee has been trading along 215 to 262, even reaching 275. I mean, up, down, up, down, up, down, up, down. We came back into those levels here twice already. We went here in April and we were back early this August and it bounced off of that. So again, the same trade continuing for Jollibee. So now will the same trade happen for the other stocks? Just to summarize, here are the stocks on live support. And here are the stocks with possible entries that pull back to their support levels. Now, as you know, I prefer to focus on stocks that are moving upward since price action typically follows the path of least resistance. When a stock is trending down, resistance, of course, is stacked up against it. Now, that said, there are times when bottom fishing may make sense, especially if prices are testing critical levels that have historically held. Now, the key is to stay patient. Monitor these names over the next few weeks and always keep the fundamentals in mind. Now, looking back at the list, right, the banks remain under pressure from declining interest rates. But, okay, with the BSP signaling a possible pause for the rest of the year, this could provide the catalyst for banks to stabilize and rebound from key levels. Telcos, on the other hand, may face further downside with the overhang from the Conectado Bill. The next stage in the Conectado Bill is for us to see the IRR, which is the implementing rules and regulations, usually comes out 90 days after the bill is passed. So there may still be some negative speculation on telcos in the next 3 months. Now, conglomerates, of course, mixed bag with performance hinging on how their individual components fare. Now, overall, patience is crucial again, and remember, August and even parts of September are historically among the better times to buy into the markets. but let's see how things unfold. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.